Hey guys, what's up? Welcome back to another video. In this video, I'm going to be talking about another company that I found in the stock market recently that could be trading below intrinsic value per share, and that is WestRock. And we can see that over the last year, this company is down around 19%. In the same time period that the S&P 500 is down about 16%, so they are underperforming the market at the moment. And then over the 5-year chart, they're actually doing really bad at around 44%. So based on their operating history for their stock performance, it looks like they wouldn't really be that good of an investment. But at the current share price, they could potentially present an interesting buying opportunity, especially because of some recent news that's come out surrounding the stock. And we'll also look into their financial statements to see how their earnings growth has occurred over the last year to see if this company could potentially grow into something a little bigger in the future from where it's priced at right now. And so right here in this article, we can see they basically talk about how recently WestRock completed an acquisition of a company called Grupo Gondi, I think that's pronounced. And basically, this acquisition costs around $970 million. And what it's going to do is it's basically going to allow WestRock to expand into Latin America, because at the moment, they're the leading provider of sustainable paper and packaging solutions in America. But if because of this acquisition, if they're able to expand into Mexico City and other areas of Latin America, then they're able to expand their global footprint and increase their revenues by expanding globally. And so that's definitely some interesting news that's come out about this company, and it could potentially help their company grow a little bit more from where they're currently priced at in the market. Right here, this is actually their annual report because they report their full fiscal year earnings ended September 30th, 2022. And so we can see that year over year from 2021 to 2022, their net sales for the entire year are up from $18.7 billion to $21.2 billion. So that's an increase of about 13% year over year. And then we can also see, if I scroll down here, that their net income increased from $838 million to $944 million. So that's an increase of about 12% in their bottom line net income. So that is some pretty good growth for WestRock year over year. And interestingly enough, even though their revenues and their net income increased year over year, their stock price has fallen by about 19% over the year. So there could be some mispricing happening in their stock price at the moment, considering the fact that their earnings increased but their stock price decreased. If they're able to continue their earnings growth, then buying into the company at a depressed, maybe undervalued share price like the one it's priced at right now could be an interesting opportunity. And so now I want to go to page 64 to look at their balance sheet comparing 2022 to 2021. And basically we can see total assets are up from 2.9 or 29.2 billion to, or they're actually down from 29.2 billion to 28.4 billion. Read that incorrectly the first time. And then we can also see that most of their business is financed by liabilities, considering they only have around $11.4 billion worth of total equity. But that being said, the retained earnings have increased from $1.6 billion to $2.2 billion. So that gives them more capital to play with and invest back into the company. And then lastly, right here, we can see their cash flow statement for 2022 compared to 2021. Their net cash provided by operating activities is down from about $2.2 billion to about $2 billion. And then we can also see they've returned a pretty substantial amount of value back to shareholders, with about $600 million used to purchase common stock and around $259 million used to pay out dividends to shareholders. So that's a lot of value, almost $1 billion worth of cash returned to shareholders in 2022. So that's definitely a good sign for anybody who was a shareholder of WestRock in 2022. And then on top of that, I forgot to mention that in 2022, they actually announced that they're going to be increasing their dividend by about 10% to $1.10 per share. And so they're actually prioritizing returning value to shareholders even more in 2023 than they were in 2022. And so right here, this is a discounted cash flow model figuring out the intrinsic value per share for their company. Yahoo Finance estimates that this company is going to grow at around 11% compounded annually for the next 5 years. They had around a little over $1 billion worth of free cash flow in 2022. And then they also had around $8.26 billion worth of debt on their balance sheet after subtracting debt, with around 254 million shares outstanding. And so that puts their intrinsic value per share at around $42 per share, which means At the current share price of $35 per share, it looks like they are actually undervalued at the current share price of $35 per share relative to the projected future cash flows for their company. And so on the right hand side here, I compared them to some of their competitors. They actually have a lot of competitors in this industry. And in comparison to their competitors, they aren't really doing that good from a financial ratio perspective. It looks like Sealed Air, Avery, Dennison, and Packaging Corporation of America have much better business efficiency for their business operations than WestRock and Silgan Holdings here. We can see that WestRock actually has the lowest net profit margin out of the 5 companies and the lowest return on assets. So from a bottom line perspective, they're not doing that well. And then from a gross profit margin perspective, it looks like they also could be doing a little better. So from a competitor analysis perspective, you'd probably want to invest in a company like either Sealed Air because of their top gross profit margin, or Packaging Corporation of America because they have the best net profit margin and return on assets. But from an intrinsic value standpoint, it looks like WestRock is trading below intrinsic value per share at the moment if they're able to grow at around 5 to 10% compounded annually for the next 10 years. And so I'll be keeping my eye on the stock, not really sure what to think of it right now, but I'd love to know what everyone watching this video thinks about WestRock. Is it a good buying opportunity at the current share price? Let me know what your thoughts are in the comment section down below. Leave a like on this video, subscribe to the channel, and I'll see everyone in the next one.